Martin Smith from eNCA Capital joins me now to take a closer look at the trading week that was. Martin, as always, many thanks for your time this afternoon. Let's start with that overall JSE performance. Earlier on in the day, I think it might have been affected by the US jobless claims, but it did pick up in late afternoon trade.
Yeah, you're absolutely right. I mean, we saw markets take a little bit of a breather yesterday. One, because I think there was some profit taking, but also, like you mentioned, the jobless claims number was a little bit disappointing. We rebounded quite sharply in South Africa, and I think a lot of that's got to do with what's happened in the resource sector. It looks like everyone's trying to get their hands on resources, specifically at what the commodity prices are doing at this moment in time. So that was a big driver of what we saw in the market this afternoon.
Let's get into company news. Absa, profits to fall by more than half, Martin. I don't think other banks have had this kind of experience, or have they?
Well, the impact of COVID is absolutely there to see for everyone across kind of all sectors. And they'll be the first bank to start their reporting properly, which will come in March, obviously next month. But if we look at their set of numbers, it was down 55 to 60 in terms of their HEPS. So it wasn't a lot of detail on the actual trading statement themselves. I'd like to see what actually comes out in the actual set of numbers next month before I make a call on what the bank's done. But as you alluded to earlier, they had a pre-close call in November. And from what they've spoken about there, it looks like things have deteriorated somewhat, and it hasn't gone kind of to plan as to what they guided to. So Absa isn't one that I'm particularly bullish on. My preferred pick is rather something like a Standard Bank or a First Rand in the sector, even though Absa is quite cheap, but it has been cheap for a long time.
Yeah, and then Massmart, also another company that's reeling from COVID-19, having to sell some assets. But they haven't been getting it right. Even before COVID-19, Martin, it was a struggle with them.
Yeah, you're absolutely right with that. And I think we have seen the share price rebound quite sharply in the last few months. I think that's down to two things. One is risk on sentiment has been there for everyone to see. And the other thing is the SA consumer, as we've seen from a lot of the retail numbers, isn't maybe as constrained as we maybe initially thought. So we've seen a little bit of a kind of pickup in their share price from there. But in terms of their strategy, they've had to make a bit of a turnaround. They've brought in new management. Walmart's playing a bit more of a role, and they have tried to turn the business around and kind of go on a new strategy. Because like you said, they've been loss-making for a while, and I think they need to try kind of figure out and see if they can kind of get to profit-making and turn things around there. So definitely one to keep an eye on. And it does look like things are going in the right direction. I mean, these numbers are slightly better than they were last year. But again, like you mentioned, definitely a little bit of a turnaround story potentially on the cards.
Yeah, and the bad news keeps on coming, Martin, because I'm about to ask you about Bidcorp. They're also expecting quite a significant drop in earnings, mainly because of the impact of COVID-19.
Yeah, exactly. And like I alluded to earlier, I think it's COVID's impact is there for everyone to see. I mean, it's not a surprise that we've seen these companies report losses. But in the case of Bidcorp, it's a really, really good company. It's very well run, good management team. And one, I think that people are just waiting for a recovery, which will eventually come, whether it's 3, 6, 12, 18 months away. When it comes, I think a company like Bidcorp will rebound quite sharply. I think it's still relatively cheap versus its global peers. So I'm holding on to the company, and I think it's one that's on a medium to longer term view, I think you can make quite a good return from.
Would you hold on to a company like Harmony Gold, Martin, over 300% increase in terms of profits that they are expecting? This commodities boom, or the super cycle, as the Sibanye CEO calls it, is really, really, really benefiting these companies.
Absolutely, and we've seen it from a lot of the reports or reported numbers that have come out. Sibanye, like you mentioned, with some incredible numbers out yesterday, and Harmony kind of falling in line. I mean, they've obviously benefited from a higher gold price. Production volumes have been up quite a lot as well. They've also benefited from derivatives around a weaker rand. So overall, a positive set of numbers, actually a bit ahead of consensus. So like we've said, commodities are the place to be, and it's no surprise that these stocks keep going higher, and the interest is there. And I think we'll see some more and more foreign interest as time goes on, and then these companies could go a lot higher. Like you said, Sibanye is one of my preferred picks in the sector, and I mean, if you look at that, it's trading on a kind of 3 to 4 times multiple, which is very, very, very cheap, given kind of where spot prices are. So yeah, again, the sector itself is looking very attractive. Just depends where you want to play. In terms of precious metals, I like companies with PGM kind of exposure, like I mentioned, Sibanye. So I would probably pick something like that over a Harmony, even though these are a very good set of numbers.
Right, and then just a final thought from you, Martin. The rand losing a little bit of gain against the US dollar, but it has maintained the strength that we've seen over the past few weeks. Your anticipation in terms of trading to come over the next coming days because of budget speech coming up?
So what we've seen is also not just necessarily rand strength, the weakness, also about the dollar weakness that we've seen over the last couple of weeks. I think what we'll see specifically over this year is kind of trading within the 14.25 to 15 rand level. I can't see it kind of blowing out either which way unless there's something massive that happens. Maybe there's another massive COVID scare or vaccines aren't working or something like that. But overall, I think the rand will kind of trade water. And I think the market is kind of priced in already what's going to happen with the budget speech. I don't think there's going to be anything massive or any massive surprises there. And like I said, I expect the rand to kind of tread water for the better part of the next 6 to 9 months.
Some good news at least there, Martin. Thank you very much. That's Martin Smith from eNCA Capital telling us that the rand may be able to hold its own for the medium term. That's